super pumped to talk about some great market updates for you guys. And if you're new here, I am Kira Ford, your real estate cheerleader, aka your favorite Dallas realtor. And let's jump into things. I know you're probably like, girl, you look tired. I am, y'all. Monday has been Mondaying, okay? And I've been doing my best to try to get some of my lenders on to give you the scoop on waiting to like the cost of waiting. So right now I have one lender who plans to be on hopefully in the next 2 weeks, but we'll see day by day. I just wanted to give you guys some great content to be able to make informed decisions where you feel confident about, oh, Kira, I'm going to wait another year to buy, or hey, Kira, I'm going to sell so I can go buy something else. So all right, let's get into it. Let me just put some chapstick's not open. All right, let's do this. Alrighty, so, and like I said, Monday's been Mondaying. I've been like back to back things. So, okay, first off, interest rates right now are sitting at about a 6.7, so they have gone down, which is great for the buyers. Also, it's good for sellers too, because it's giving buyers the confidence to get back out here, to know that, hey, being in the sixes is normal. This is our new normal. Thinking that the interest rates are gonna go back to a 3 or a 2 in this lifetime, something is gonna be very, very wrong if that happens. And yeah, we just don't want that to take place. I mean, we would love for interest rates to be low like that again. However, it took thousands of people dying for interest rates to go back that low. I don't want that to be the case for us to just get interest rates for someone to buy a home. So that's why you have to be ready, so you don't have to get ready. So if it's credit, if it's debt to income, if it's credit cards, this is the time to start cleaning those things up so that you're better prepared to go where you need to go. Okay. Also, in the beginning of the year, when I was telling you more about one of the economists that we listened to, and when I say we as real estate agents, they were saying that we're going to have multiple cuts this year in the feds, and we're going to have lower interest rates. That sounded really great in the beginning to give people hope. But now that we are like trucking towards, we're in the second quarter, we're trucking towards, half of the year. Now they're saying that there will be no other cuts until maybe the end of the year. So if anyone is like expecting to buy a home this summer but was waiting for like a cut, you might be disappointed. They're saying that interest rate cuts from the Fed probably won't happen until like third or fourth quarter. So if that's gonna be you, this is a good time to start preparing yourself so that you are ready to go when the time comes, okay? But we were supposed to have multiple cuts, but it looks like we're only gonna have one, okay? Also, I don't think people realize that we still have an inventory issue. We don't have enough homes being on the market for enough people who need housing. For instance, every year we need about 1.8 million homes, new homes, to come onto the market, which is like new construction. And year after year, we have like maybe 900,000 that are getting started. So we're in a deficit of quite a bit of homes. And so we're still somewhat, depending on what neighborhood, what local area you are, we're still heavily in a seller's market. But let me tell you this, lean in. Right now, new construction is giving deals away. You know why? Because they don't have as much confidence as they once did. And so many people are so unsure of like what they want to do because one, I'm sure you've heard on the news, stocks have gone down, people's 401k has gone down. So it's just, a lot of people are very uncertain. Inflation is still inflationing. But like I tell anyone who asks me about buying or selling, can you outsave inflation? And what better investment than to purchase a property. Because, yeah, your stocks might have gone down, and yes, maybe your retirement has gone down, but has your house appreciated? Has your house appreciated? And let me tell you this, it has, because year over year after year, especially in Dallas, Texas, on average, we appreciate anywhere from 5 to 7%. And so I'm here to tell you, when you invest smart, your investments make sense for you. So what else do I want to talk about? Oh yeah, also I wanted to bring this to people's attention too, because affordability is still somewhat an issue, but not really ish. But on average, they're saying a normal house right now is 400,000 in the US. And 73, what is it? It was 70% of people can't even afford a $400,000 home. So Jake wants to say hi, guys. Tell them hi, baby. Tell them hi. All right. I'm on live. We will talk later, okay? We will talk later. You gotta love your pups, okay? And so I'm here to encourage you that get in where you fit in, because affordability, it truly is going out the window. But you guys haven't been listening to me, so let me just tell you this. 5 years from now, I'm gonna look back at some of these lives and be like, first off, girlfriend, you look gorgeous with no makeup. Second off, I'd say, girl, make sure you put yourself together before you get on these social medias. But that's nor here nor there. Third, I would say I'm happy that you invested. I'm happy that you took the risk now, because now your house is appreciated and you've paid off a crap ton of it, versus now people are able to get into the game, but now they're using so much of their income because homes have continued to go up, because that's what happens. They appreciate, which means prices go up each and every year. So that's my other thing that I wanted to tell you guys. And then I wanted to give this example because I wanted to give perspective to buyers and sellers. So on average, NAR, which is the National Association of Realtors, they have basically a chart. And the chart is like $0 to $250,000 houses, $250,000 homes to 500,000, 500,000 to 750. Then you have 750 to $1 million. Then you have $1 million plus. Okay, so everything that is $500,000 and lower has been decreasing. And when I say decreasing, it's basically having to go down a little bit in price because of affordability. It is appreciating, which is nice once you buy it, but they're having to decrease to be able to get some momentum on it to then drive the price back up. And then that 500 to 750 has been flat. Like there hasn't been any like true decreases in like price points. So like when your house goes on the market, they measured it off of who's having to do a price reduction. A lot of price reductions are having to be on that 500,000 and lower, and that's because, you know, with all of these inflations and all these issues that are going on in the economy, it's affecting really the middle class and lower. Because if you look at what I'm looking at, which is this chart, 750 and up, I mean, it's an increase of like 6%, an increase of 12%. $1 million and up, it's an increase. More people who are in luxury are selling and buying than they ever have. Because you know why? It goes back to that saying. When people are being greedy, you be cautious. When people are being cautious, you be greedy. And so right now, I think that the million plus know that, hey, it's a good deal. And people are needing to get out of their house to be able to, honestly, make up for either the stock stuff that's gone down or their retirement that has like dropped significantly. So if you are in those price points, just know the market is going to be good to you because your appreciation is going to continue to go up as it has been. And let's see, I already told you about new construction, but right now, new construction confidence from just what they do, what they send out to NAR, which is National Association of Realtors, they're saying new construction builders are not as confident as they once were. They're needing to start building more, but they also want to make sure that people are going to buy more. So I'm going to start bringing you guys some deals when it comes to new construction so you know where to go and, you know, buy and get the best deal. Of course, I would love for you to work with me during that process because I'm going to help you get incentives. I'm going to help you with negotiating more things than just the price and money towards closing, because real estate is way more than just picking a house. We help make sure that you get to the closing table. So if you're someone who is interested in purchasing or selling a property, please schedule a strategy session so I can help you from where you are to where you want to be. Before I got on this call, I was having a conversation from a referral, and it's a friend from Atlanta. She's a realtor. She referred me to one of her friends in Dallas, and she's wanting to sell 2 of her investment properties to go buy a ranch. So this is a good time to consolidate to then go buy something more of what you want, because this is the time to do it. People are starting to cash out. Remember, boomers are the biggest generation of wealth is being turned because a lot of them are retiring. 10,000 people turn 66 every day. And so a lot of people can't keep the same businesses that they have, which means that they can't keep the same expenses that they have, which means that they need to sell, which means that they might want to, give it to somebody. Oh, Jake. They might want to give it to somebody to be able to pass it down, but you can't pass down wheels. You got to put it in a trust, and a lot of people don't know that. And so I am having a seller seminar that is going to teach people how to sell. I work with a lot of move-up buyers, so they need to sell and then buy. And I've noticed that a lot of them will sell and then buy new construction. So it's a great seminar to attend if you're able to. And if you're not, no worries. I am going to record it and put it on my webinar on my YouTube. And so that's kind of where we are, guys. And I also will be doing an event that is secure your secure your future assets, because a lot of people need to know more about trust and about long-term savings and high yield savings and what to do if you don't have a trust, have a will, and what all these things mean, so that you are able to best own well and be able to pass down that legacy that you're creating right now and sacrificing for. So I love you, friends. I will see you next time. And until then, if you guys have any questions, you know what to do. Book a strategy session or comment below. See you next time. Peace.